a look at Nigeria's fixed income market. The Naira came under pressure at the interbank on Thursday owing to an increase in demand and despite a robust forex sale by the central bank this week. Now, meanwhile, interbank lending rates remain volatile but still below the multi-year highs recorded a few weeks ago. Now, for a review of the fixed income and money markets in Nigeria, I'm being joined by Yetunde Ogunremi, analyst at Stanbic IBTC Global Markets. Thank you so much, Yetunde, for your time.
Thank you, Esther. Good morning.
Let's start with how the market is or has been adjusting to the monetary MPC meeting. It's been 3 days since that meeting. Just tell us how the market has been adjusting to that.
Okay, the interest rate markets, that's treasury bills and fixed income, became livelier after the MPC meeting because the MPC did not change anything in terms of CRR, liquidity ratio, and the MPR rate. So we saw rates drop across the curve as banks and investors look to invest in risk-free instruments. The treasury bill curve dropped by about 30 to 40 basis points, while the bond curve dropped about 30 to 35 basis points. On the foreign currency side, the exchange rate has been riding on all company inflows because we saw about 350 million coming to the market on Wednesday. On the back of this, rates dropped about 50, appreciated about 55 kobo. From the high 159s to the low 159s, and it was also responsible for the CBN not selling all the 400 million that was on offer at the WDA's auction. So the CBN sold 350 million because market was already saturated with the oil company inflows.
Okay, let's talk about what the reaction of non-bank investors has been to the monetary policy's flat stance.
Okay, non-bank investors have been extremely interested in treasury bills. The treasury bill auction on Wednesday recorded significant subscription levels. Total subscription was 315 billion against an offer of 124 billion for the 91, 182 and 364-day bills combined. But the CBN sold just what was on offer. The 1 year in particular received a lot of attention. 191 billion was subscribed and the CBN sold just the 59 that was on offer. So it was no surprise that there was a bit of a scramble in the secondary market after the auction because there was obviously a demand overhang and non-bank investors looked to satisfy their unmet demand through that window.
Okay, let's talk about the Naira for a bit. We saw the local currency losing 1 Naira 70 kobo yesterday to the US dollar, closing around 161 Naira. Now, is that a red flag? Is that something we should be worried about, or this could ease in the coming sessions?
Okay, initially, the initial reaction is not to worry about that because, like I said earlier, market had benefited from all company inflows, so it had appreciated a bit. The depreciation of a 1 Naira 70 kobo was because market players had brought demand forward. On the back of the concerns that the MPC raised regarding BDC activities at the last MPC meeting. The CBN governor did say that he was going to release some circulars to address this in a couple of weeks, but I just found out this morning that a circular was indeed released last night in an attempt to address these concerns. Now, the import of that circular hasn't been fully digested, but the highlights of this is that they've scrapped the wholesale Dutch auction system and have replaced that with the retail Dutch auction system. They have capped the amount that banks can sell to BDCs on a weekly basis to $250,000. They have increased the allowance on MasterCard from $40,000 for individuals to $150 per annum. They have also introduced some additional documentation for smaller medium-scale companies looking to import. And they have also said that Western Union inflows will have to be received in Naira only and no longer in dollars. So we're expecting the circular to be a few days off, but the CBN has been very proactive and they've released the circular now. So over the next couple of days, the market will digest the import of that circular. But like I said earlier, the 170 depreciation was as a result of players bringing their demand forward on the back of the oil company inflows, and 159 levels were actually very attractive for them at that point in time.
Now, Yetunde, if we're looking at reduced or lower dollar supply to the BDCs, isn't that going to increase or widen the spread between what the Naira is trading at the BDC and the official market?
Ordinarily, that is what should happen, but we are not sure about what the CBN has done as well, because they haven't said what they're going to do in their window, because you know that the BDCs are able to access both the interbank market and the CBN market, so they haven't said what they are going to do. So we really haven't been able to analyze what kind of supplies the BDCs are going to get. So that will be clearer in the next couple of days.
But could we say the Naira, well, what level do you think, with all that's going on right now, the policy towards the BDC and, of course, the CBN still, of course, willing to provide dollars at its WDAS, what range could the Naira continue to trade going forward?
I still see the Naira in the 159 to 161 band. I don't think rates are going to depreciate sharply or appreciate sharply either. What we also need to consider is the removal of the wholesale WDAS auction system means that banks cannot really sit on dollars anymore, because what the retail system does is that the banks would have to bring the customer names forward. It's actually the customers that would apply for dollars to the CBN. So the interbank market is going to be a bit muted, because the supply would then, they'll be left with supply from the oil companies. And then they'll also be left with demand from the BDCs. But I see Naira trading between 159 and 161 band over the short term.
Okay, well, it will be quite interesting to see how that plays out for the Naira. But let's talk about bonds now. We've seen yields at the bond market still hovering around 13%. Now, we have seen perhaps I could use the word healthy or the phrase healthy demand from PFAs, but it hasn't been strong enough to push yields below 13%. What's your outlook for the coming sessions?
Okay, what has happened with the bond market is there is interest from the PFAs, but you'd also find that when rates drop, you find some investors looking to take profit on positions that they have held previously. So we still expect rates to be below 13% on the bond across the bond curve over the short to the medium term.
Okay, so what about your outlook for the next bond auction? We're just about to close out the month of September, going into a new month in terms of what the rates that investors could be looking at from the DMO.
Okay, we expect that auction to be fully subscribed. There's a lot of demand from the PFAs, like you said. They are looking to invest in risk-free instruments. They are looking to put some duration on their books. They found fixed deposits not to be quite as attractive as they used to be. So we expect that to be fully subscribed, and we'll see levels up between 13 to 13.5. What
about demand from foreign portfolio investors? Has that increased significantly in the last few sessions, especially after the U.S. Federal Reserve decided not to taper in the immediate term?
We haven't seen the kind of demand explosion that people anticipated. There was some interest at the Treasury bill auction, especially at the 1-year point, and we have seen the one-off trades in the secondary market. They would come to the bond market, but I don't think they are going to break the banks and let all the cash come into Nigeria just yet.
Well, let's go back to the interbank market. We've seen rates, we saw rates spike significantly a few weeks ago, but now we're looking at a short-term cash, call money, 7-day cash down to around 12%. Do you think this is going to be sustained in the short to medium term, or do you think the market is still at risk of that kind of volatility that we saw a few weeks ago?
I think that would depend on the OMO activities that the CBN does. What has happened is there was a maturity of OMO bills of about 100 billion yesterday, on Thursday. So we saw rates close at 14% from 17% the previous day. So if those bills continue to mature into the market, with the removal of with the cancellation of WDAS, we don't expect significant volumes to go out through FX anymore. On the bond side, it's just a small amount that is going to go out from the market. So Naira would probably remain at these levels, especially as FAC inflows would also come in as well over the next couple of weeks.
Well, talking about FAC inflows, we did hear that there was a bit of a delay with the FAC disbursement. Is that true?
There was a bit of a delay. The inflows came in about 3 to 4 days late. Sometimes that happens depending on where the statutory allocation committee decides on when the inflows are meant to come. We have seen that happen occasionally, so it's nothing to panic about, but the funds were eventually released, and we anticipate that the funds for October would be timely as well.
All right, thank you so much, Yetunde, for talking to us, taking us through the fixed income and money markets in Nigeria. Yetunde